Hi, my name is Denislav Metodiev, and I would like to present my analysis on how Adobe Systems will perform in the near future. Adobe is a software as a service provider with a market capitalization of approximately 40 billion and revenues in 2014 of 4 billion. Those were primarily generated through product sales, subscriptions and support of its two biggest product categories, digital media and digital marketing. The bulk of the sales came from the Americas and the EMEA region. When looking at Adobe through the HOLT lens, we can see that the company has created economic value over the past 20 years by keeping its CFROI above its cost of capital. However, in the past 2 years, Adobe's CFROI has been declining to reach 11.18% in 2014. This was mainly due to treasury purchasing, increased R&D and marketing expenses, and forex loss. In the coming 2 years, however, Adobe's CFROI is projected to reach 17.09% and 24.29% respectively. This is most likely due to the company's move to a cloud-based business model in the recent years. At present, however, the company is underperforming compared to its competitors. Next, the asset growth of the company has been quite volatile, with both periods of aggressive expansion and decline. In the past 2 years, Adobe has in fact been conservative about its asset growth, which is why it is presently underperforming compared to its peers. Furthermore, since 1999, Adobe has consistently outperformed the S&P 500 index, bringing more value to its shareholders. Finally, compared to the Fed effect projections, we can see that the market is quite optimistic about the performance of the company. When it comes to sales performance, we can see that the company has been underperforming compared to its peers in the past 2 years. Dollars of revenue per dollars of assets have declined, with sales growth decreasing, albeit increased marketing expenses. The operating margin has also suffered with increased R&D and general administrative expenses. The company has seen sales growth in 2015 so far, but it is still falling behind earlier projections of 4.9 billion for the year. In terms of risk, the company is mostly outperforming its peers regarding chance of default, leverage, and stock price volatility. The company's interest coverage ratio has improved last year because of a decrease in debt and is projected to improve further in 2015 and 2016. The only significant risk of the company are issues with revenue recognition. When it comes to valuation, Adobe's PE and HOLT price-to-book ratios indicate that the company's earnings and equity are quite highly valued. We can also conclude that the company itself is overpriced, as can be seen by the warranted price downside of 44%. When taking all of this into account, we can conclude that Adobe is more likely to underperform. Thank you for listening and for bringing clarity and confidence to my understanding of finance and investment.